Good day, traders. Stacey Burke from Stacey Burke Trading. Daily currency levels pound crosses on Monday, May 18th. No major news on the calendar today. Tuesday morning, 10 a.m. New York Eastern Standard Time is our next major news release, and that's Federal Chairman Powell testifying. Wednesday, 9:30 a.m., we have the Bank of England Governor Bailey speaking. Today, first up, we have our pound Aussie, and Friday, of course, we continued that move down. In our daily chart, we can see that the swing lows from back in January have just been tested this morning on the gap. Market is showing a lot of weakness. We've almost made it to the bottom of that 250 pip box. There are stops at that level at 87.50. The swing lows from December are below there at 86.50. And again, just identifying the peak formations for each month that have remained intact, that have given us support, resistance, whatever you may call it. The market, though, has extended its move out from the beginning of the month into that lower 250 pip box. When we look at our 4-hour chart, we can see again that the market dropped below the 1.9000 level, taking out stops from previously down at the 88.50 level, and then this morning again opening on that gap, since consolidating inside of that 87.50, above that 87.50 level, but again a weak downward moving market. We do have a micro trend line. Again, we have a micro trend line that's still intact, following that down. No micro trend line break yet, so again this market is still showing a fair amount of weakness, but 87.50 could come in as a support level. We had a breakout of the range from Wednesday's low. So again, if we squeeze our chart up, we talked about this in yesterday's video. We had a range expansion on Tuesday that went into consolidation around Friday, Monday, before breaking out. And then we extended that range from the breakout on Friday into this morning's session. We do have a support level again down around that 87.50 level from the lows of Asia, but again our highs from the beginning of the session are up at 88.25. The swing lows down at 87.75. So we do have a 50 pip box. Right now the market is heading up towards the highs of the day, depending on how Europe and London open, whether they hit the highs and reverse, or if they break through and retest the breakout from Friday's session. Again, this market still has room to fall, but again, how it handles that first hour in the Europe session, if we work the high and reverse, we could see a stop on high, stop on low for a reversal, or we could see this market work the high, go into consolidation and reverse, taking out the lows and retesting that 87.50 level. Again, stops above the highs of the Asian session and the lows of the day. Next up is our pound Canadian. Again, when we look at our daily chart, this market had a fairly strong drop Monday, Tuesday, 1, 2, 3 down. Monday, today, we're down near the 1.7000 area, where that market originally reversed from. The measured move of that peak formation at the beginning of the month would take us somewhere in the range down around the 68.25 level. But again, this 000 area could act as a major support level. The market reversed off of that level before, and we may find a bit of buying comes in at this level. When we look at our 4-hour chart, again, looking very weak. We have a micro trend line still intact. Not to say that this market can't reverse up fairly strongly, but there is a bit of a gap, and there are stops below that 250 pip box at the 69.60 level. And again, this market's gone into consolidation after a gap down this morning. We could see a continuation for a second day trade. The measured move again takes us down to around that 68.25 level. So traders who are already positioned short would possibly have a initial target down around that level. The market is showing weakness. We've gone into consolidation after the gap. We could see a continuation of that move through the lows of the day. We may not even see a stop hunt, but again, depending on how Europe tests in that first hour, we may see a hit to the high, consolidation, and a reversal, or we could see a hit to the high, break to the low, and a reversal. But again, if we see that market working the high and coming back down towards the lows of the day, we could see a second day measured move for that move down around that. Again, the measured move on that is around 68.25. Currently inside of the highs and the lows of the session and below 70.50, depending on how it handles that initial hour, will give us an indication if we're in for a continuation of that move. Next up is our pound Swiss. Again, our daily chart similar. We had a descending triangle and a breakdown in the second week of the month, dropping down, and we are now at the 1750 level. There are stops just below currently where we're at. We've dropped through the first measured expansion of that descending triangle. The second leg of that would take us down to approximately 68.60. And again, that market potentially, if it was to continue falling, could even head down to the 1500 level. If we were to reverse back above the 1800 double zeros, we could retest the breakout back up around 1958. When we look at the 4-hour chart, again, similar. We see a fair amount of weakness, but we are at numbers right now. The market has had a stop hunt on a 1, 2, 3 down. Again, we could see a continuation of that through the initial breakout back in March, retesting stops that are down at the 1640 level, but this market is showing quite a bit of weakness at the moment. Again, we had the continuation move of Friday's U.S. session, dropping down another 75 pips with the gap this morning before pulling back and setting a high and a low in place. Now again, how we handle the first hour of this Europe-London Open, we do possibly have a 25 pip box already traded in. We're in the second level currently. We possibly could stop hunt up towards the U.S. session shorts for a move back through the low of the day. Again, if this market was to break to new highs and break back inside of that U.S. session continuation, we could see a retest of the highs up around the 1825 level. This market currently is showing quite a bit of weakness. Pound yen. Again, big drop on Friday. We filled the gap from the breakout back in March at the 129.40 level. But again, this market possibly has the ability to continue having a second day follow through on that move. That was a fairly strong move on Friday. Again, you can see that the market reversed in that 500 pip range back in March before breaking up another 500 pips. On our 4-hour chart, again, there's a fairly large gap down to where that breakout occurred in March at the 128.60 level. That's 100 pips below where we're currently at, and this market is below the 250 pip box. We do have a micro trend line that is still intact. This market is showing a great degree of weakness. On our 15-minute chart, we see that micro trend line is just being tested as we head into the beginning of the Europe transition in the next 20 minutes. We may see the market retest the highs, hit the high, and reverse. Or we could see this market weekly fall down for a stop hunt high and a continuation. If this market was to retest on the upside, we would want to see this market either drop down and break through the highs, or break through the highs and pull back and retest that breakout level at 130.00 from the U.S. session shorts. Currently, if we were to see this market continue to fall again, the measured move on this would take us at least through another 00 box, and that would take us somewhere down around the 128.60 level. Next up is our pound New Zealand. Again, this market, as we saw on Friday, we talked about this. So we had 2 pins to the high. Friday's session formed another pin. That's 3 pins to the high up through that 400 level area. We have stops below the low of last week at 2.0120. This market again has come back underneath of the peak formation candle. We're trading sideways underneath of that 350 level. And if this market was to fall, again, we could test the lows down at 120, 123, and a measured move of that, if this market was to fall, either could fail at the numbers down at 1.2000, but a measured move of that would take us through the stops back in March, possibly even down to that 97.60 level. But again, we don't try to predict. We just watch how price behaves at these levels, and we look to trade when the market shows its hand. So again, on our 15-minute chart, we saw that market work the high, and sell off in the third hour, the second window of the 3-hour US session, dropping down on a gap, consolidating, taking out Friday's Asian lows, not quite the low of the day, but we do have stops down. We have a bit of liquidity down below the 300 level from Friday as well as Tuesday. And just to reiterate with traders, we saw the big move up. When we see a big move like this, all we do is we redraw our highs and our lows. So we wait. When the market gives us a new high, new low, we draw our lines, and then we wait for the stop hunt. Depending on how the market handles that, it'll either be a breakout continuation or an extension for another 25 to 50 pips, or the market will pull back inside of the range, and now we have an area to base highs and lows and trades off of, especially at the equity opens. So again, here we are. We're consolidating at the low of the day, the low of Friday. We've got one push, two push, three pushes. We could see a pullback and a retest and hitting the stops, possibly having a continuation. We are underneath of one push, two push, three pushes to the high, consolidation, dropping down, consolidation. If this market was to move through the lows, we could have a market that moves down fairly strongly today and does not pull back. If this market was to do that, you would not want to be counter trending that market. Next up is our pound USD. And again, this market similar, showed a great degree of weakness. We are at the first full expansion of that measured move from the initial peak in the first couple weeks of May. If this market breaks through that 120.50 level, we could see another full extension down somewhere around the 1900 level. When we look at our 4-hour chart, we see this market again is showing a great degree of weakness. The measured move on this pullback, just on the short term, gives us a possible measured move, taking us somewhere around the 120.60 area. When we look at our 15-minute chart and in this 4-hour, there's not a lot to stop this market to continue to fall. Our breakout stops are around the 1975 level. And on our 15-minute chart, again, we see that micro trend line was broken on this morning's gap. We see the market has pulled back. We have stops above the high of the day. Okay, and we have stops, of course, below the low of the day. And again, with some of these similar other pairs, we may see a second day extension of that move from Friday. Again, we wait to see how that Europe-London Open, if they hit the high and work the high without taking out any further trades from the US session, we could see that market roll over and retest the lows of the day for a measured move back down. Just closing on a quote from Mike Bellafiore. Trading is not about being right. Trading is a game of math. It is about finding setups that offer you a good risk reward and pulling the trigger. Stay disciplined, traders. Stay focused. Don't try and catch every move in the market. Stay up top and down below. If you're trading with the trend, there's still going to be a stop hunt against the move, and you can jump in when the market gives us the right price confirmation. So keep it simple. Stay disciplined, have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.